Greetings, my YouTube family. Thank you so much for visiting my channel. My name is Isaac Jonas, and I'm a retail investor, and I love creating content on personal finance and investing. And today, I'm going to share with you uh, the major updates in the stock markets, particularly in Canada and the US. So this past week, the major indices, the S&P 500, the Dow Jones Index, and the Nasdaq, they closed the week lower compared to the previous week. The S&P 500, it dropped by 0.14%, and the Dow Jones, it dropped by 0.63%, whilst the Nasdaq dropped by 1.1%. What this means is that because the markets, as measured by the major indices, have been going up and up, this was a pullback a little bit. So the direction which the market will go, nobody really knows. And I also don't try to forecast the market because there are a lot of variables that change. But what I do is I try to understand the impact if it drops or if it uh, goes up, what will be the impact to my portfolio, and try to mitigate the risk accordingly. Now, in terms of the economic calendar in the US, the Fed Chair Jerome Powell, he spoke on Wednesday and Thursday in the Capitol Hill, where he didn't commit to cutting rates at a specific date. So what this means is that investors will be watching closely the numbers like the CPI, core inflation, CPI, and other indicators. But unemployment rate was 3.9% as per the data that came out, and it was forecast to be 3.7%. And non-farm payroll for February was 275,000 jobs that were released. So what this means is the economy is very strong. In Canada, the Bank of Canada did not change the rates, the policy rates. So what this means is the Bank of Canada governor, they said they don't want to cut the rates prematurely, but also to watch on inflation because it might reverse the gains that have been made. So they are being very cautious. And President Biden also gave a speech in terms of his policy. So those were the major highlights this past week. And this week is going to be interesting. On March 14th, there are key numbers that are going to be released: the initial job claims, the core retail sales, and also the CPI month on month and year on year measure. So what this means is, these numbers, they are going to reflect how the economy is currently performing. So for me, the way that I look at this, these are fundamentals. So if the economy is strong, what this means is that uh, and businesses are expanding, means those who are invested in the market, and particularly strong businesses, they are um, stocks, in terms of the share values might be increasing. So that's the good thing about investing in the stock market, because if you leave all your money in the checking account, what it means, if inflation goes up, and also equities markets like the stocks, they perform better usually than holding cash. So in terms of my strategy, I like to hold a bit of cash. So I have some cash, maybe about still around 30% of my portfolio, and I'm waiting to deploy if the market retreats. But usually I just hold exchange traded funds that track the S&P 500 and very strong companies in terms of the fundamentals, right? Very few individual companies, right? And these companies have to drop to a particular range so that at least I have a margin of safety. In other words, I estimate their intrinsic value, and then when they drop, let's say by 30, 40%, or even 20%, companies like, I hold, the top, top 5% in the US stock exchanges, right? So, like Microsoft as an example. So, that's my strategy. And then I hold some cash, and then I also hedge my portfolio, because what happens is that if the S&P 500, drops, or the market drops, usually the VIX, the volatility index, it goes up, like I've explained in other videos. So what I do is I kind of have a small percentage in that, kind of like, some people, they consider bonds and equities, right? To say sometimes when the equities market drops, the bond market the bonds might go up. So what I do is I kind of like, balance my portfolio, because I realize that, in as much as I'm young and you might be bullish, sometimes the market might drop. Let's say if it drops and stays there for 5, 6 years, will I be comfortable with that? So those are the questions that I ask myself. So when I hedge the portfolio, it means if you have some portion in cash and some money, a fraction of your money in treasury bills and other assets, then those ones, they can sustain you. And if you, in my case, like I believe in the long term growth of the US economy and even some companies in Canada, I can be buying depending on the sectors that I'm looking at. So right now, I've been adding positions on some companies that have been dropping in the US, and I'm also looking in some potential stocks to buy in Canada. So that's it for today, and I hope this is helpful. But this is not investment advice. It's just my insights and what I think, and this is for educational purposes. And may the market be with you. If you haven't subscribed, please consider subscribing so that you don't miss content like this in the future. Have a wonderful week ahead. Bye bye for now.